Stocks climb some more with the gainers far outstripping the losers today. Oil and gas, IT and consumer durables lead the charge, while mid-caps outperform today.
Varun Beverages stock jumps after it says it is buying the beverage company in South Africa for 1320 crore rupees. The South African Pepsi franchisee offers a big opportunity to scale up given low penetration of sodas.
About 9,500 crore rupees worth of shares change hands in big block deals today. In a deal frenzy, Astral sees near 1.74% stake change hands. Nippon India AMC 2.86%, Tips Industries 6.7%, Embassy REIT 23.5%, and Shriram Pistons near 9%.
The Reserve Bank has barred lenders from having any exposure to alternate investment funds that count their borrowers as clients. The move will scuttle any evergreening of loans via AIFs. The stocks of NBFCs with exposure takes a knock.
New kids on the block today. India Shelter lists at a premium of 26% to its issue price, while DOMS Industries lists at a whopping 77% premium to its issue price today. Hello there. Welcome to Business Lunch this Wednesday afternoon. I'm Nisha Podar. With me, as always, is my co-anchor Pavitra Parekh. So, Pavitra, the equity market deals are just booming with the equity market window that has been provided to all the investors and companies who have their mandate for churning the portfolio or getting an exit at higher valuations. That's the theme of the market. But also not to forget that Nifty 50 touched another record high today and almost at a kissing distance of 21,600 levels. So yes, still maintaining above 21,500 levels has let go of some bit of gains, but that's nothing to talk about because overall market strength and breadth is looking so good today with advances far outpacing the declines. Nifty 50 at the moment continuing with 60 points gain. Sensex is gaining close to about 200 points in trade. Bank Nifty is flattish to green with some minor gains. And mid-cap universe, that's giving the maximum push with 0.4% gain at the moment. On my screen, some of the PSU companies like ONGC is the top gainer in terms of percentage. But remember, it's a day when the big boys like Reliance Industries, HDFC Bank is well contributing to the overall market momentum. So it's looking good. But on the contra side, on the downside, Adani Ports is the top Nifty loser in terms of percentage, Pavitra.
So, absolutely. You know, like you mentioned that this is a very solid looking screen. It's the kind of market where any, 50, 60 point dip is just immediately getting bought into. You mentioned ONGC. I just want to pick up on that because it is the entire oil and gas space which is up and about in trade. Check out what's going on with Oil India. It's up 15%. ONGC is up 5%. Reliance, you mentioned today, is doing well. It's actually the third straight day of gains that we've seen. And in just this kind of period, it's seen an over 5.5% kind of move. So when a weight like Reliance moves, it's of course a big positive. The consumption pack also doing very well today. So names like Tata Consumer, Britannia holding up well in the green ever since the word go. And of course, on the back of Accenture, coming out with no negative surprises at all, holding on to their guidance. IT once again is up and about in trade. So looking quite good for the markets. But let's kickstart the show now by talking about the listings which came through today. Like we were pointing out, we had two debuts on the Lal Street today. First up, stationery major DOMS saw stellar debut, 77% premium to its issue price. And this is, versus it's currently at 1407 versus the issue price of 790. In fact, this morning we spoke to the company's managing director, Santosh Raveshia, on the growth outlook for the company from here on and what their post-listing plans could really look like. So listen in to what he had to tell us.
Always been very focused on attaining, more market share. So currently we are at a market share of around 12%, and going forward we are in our journey of attaining market share to the maximum. So we are optimistic of maintaining our EBITDA margins to the tune of around close to 16%.
All right, that's a new kid on the block. Let's focus on the other big listing. And this affordable home financier, India Shelter Finance, listed at a premium of 26% at 620 rupees per share versus an issue price of 493 rupees per share. And earlier we spoke to Rupinder Singh, who's the MD and CEO of the newly listed company, to discuss their growth and outlook for the company and what is it that the investors have really betted on. Listen in.
The growth of last many years, it remains consistent around 40-42%. So the strategy has always been there, that right blendation between people and technology, which we built this structure entirely, we continue to run for some more time in the same fashion. So that's a thought. I believe the way government incentives, the way the market is responding, the way housing is working, and the way the self-employed set of customer, the demand is coming there. So I am very optimistic about growth in future also.
Okay, that is India Shelter, listed at a 17% premium and holding on to those gains. But let's talk about some of the NBFC stocks today with AIF exposure, because those ones are down in a strong market. This after the Reserve Bank barred lenders from having any exposure to alternate investment funds that count their borrowers as clients. The move is aimed at preventing lenders from utilizing the AIF route to evergreen their loans. So Lata is here to really take us through what this means and the kind of impact that we could have. Lata.
Now, let me give the background first. Reserve Bank has noticed a practice whereby banks and or NBFCs, when they find that a borrower is unable to repay, they float an AIF, invest in that AIF and lend the money of the AIF to the stressed company so that company can repay the bank or the NBFC. Now, the AIF itself redeems its units only after 6 or 7 years, so the company has enough time to turn around. Now, the Reserve Bank has said, if banks and NBFCs own units in AIFs which have lent to their existing borrowers, then the banks and the NBFCs have to sell out of these units in 30 days. Alternatively, if they continue to hold the AIF units, they have to fully provide for their exposure in that ultimate borrower to whom the AIF has lent and who is their borrower as well. Now, this includes companies in which the lenders have current exposure or a loan or, have a loan in the past 12 months. Now, in some instances, the AIFs, while giving a loan to the company, to the stressed company, insist that if the company defaults, the AIF will have the first right to take out their money. This, in legal language, is called priority distribution model. In such cases, Reserve Bank says the banks or the NBFCs will have to set aside their from their capital equivalent to the investment in the AIF. So it's both a provisioning penalty and a capital penalty that Reserve Bank has announced.
All right. Thanks, Lata, for giving us all those details. We'll get you more viewpoints on that. But just one alert on the Paytm counter, close to 2% gains at the moment because of some positive commentary coming in from the management in terms of the profitability and also on hiring and revamping the wealth business. So keep an eye out on that. Of course, there was a block deal on this particular counter. If you really take a look at year to date, then you don't see that kind of an exuberance on this particular counter. It has dropped substantially. All right. And sticking to the new rules and to discuss the implications of the AIF, well, we earlier spoke to S. Srinivasan, who's the managing director at Kotak Alternate Asset Management. Listen in to his viewpoints on this particular aspect.
The intent of the Reserve Bank of India's regulation is correct, i.e., you want to discourage round-tripping or evergreening of your loans. But to your question in terms of who is impacted, the short answer is the entire AIF industry is going to be damaged by this. It's not restricted to just NBFCs. The entire industry is likely to be impacted. And to be able to sell their, the banks to sell their existing units simply because there has been some exposure by a AIF in which they have invested within 30 days is going to be a very, very challenging task. But clearly, wherever NBFCs have sponsored an AIF and where they have parked some of their stressed loans or about to be stressed loans, will come under the scanner.
Okay, that is an important word coming in. But with that, we're going to get into a short break. On the other side, we have Tech Mahindra on our radar, and we're also looking at the insurance companies. We'll tell you why when we come back. Hey guys, welcome back. You're still tuned into Business Lunch. Now, Tech Mahindra is in focus today because the new MD and CEO Mohit Joshi assumes office effective today. So Rima is here to tell us more about this. Rima, the expectations are definitely very high.
The expectations are that under the new CEO and MD, Tech Mahindra is going to turn around. For the last many years, Tech Mahindra has been underperforming the industry on revenues and on margins. So the first ask is that at least get back to industry growth rates on a sustainable basis, and that chart of India, Tech Mahindra's underperformance versus peers will also come up. The second one will be to improve margins structurally. Now, historically, Tech Mahindra's margins used to be between 10 to 15%, while peers like Infy, TCS would, mostly have margins above 20%. So anyway, Tech Mahindra's margins were lower than that of the industry. But in the last couple of quarters, margins particularly came down. In fact, in the last quarter, there were a few one-offs, but reported margins declined all the way down to 4.7%. So I think the immediate ask will be to improve margins and do it on a structural basis and hopefully get back to that 10 to 15% kind of margins. And the third one will be Tech Mahindra historically used to have a dominant presence in communication. It's come down to 37% of the overall revenue, but now that Mohit Joshi, who has a non-telecom pedigree, earlier he was the president at Infosys where he was looking at healthcare and BFSI. So now that the new CEO of Tech Mahindra is a non-telecom pedigree, the ask will be to diversify a little bit more, focus on growing the non-telecom pieces of the business. He's already put in place a new organizational structure which will come into effect from 1st of January. So even before he's officially taken charge, there has been a new organizational restructuring. But for more clarity on the goals, on the revenue, on the margins, the KPIs that Tech Mahindra will be working with, Mohit Joshi has said that in April, when they declare their Q4 numbers, Tech Mahindra will be outlining the medium-term plan. Back to you.
All right, thanks so much, Rima, for getting us all those important details on top brass change at Tech Mahindra. Now, take a look at the market has given up all the gains in the last few minutes of trade. And Nifty 50 has gone below the 21,500 margin by far. It's at 21,460 odd levels. What has lost out the most is the mid-cap universe. Bank Nifty is on the flat line now, but mid-cap, which was up by over 4.4%, is now in the red, comfortably in the red at 0.14% down. So keep an eye out on the market. There's massive profit booking that is really taking place, and it has changed the course of the market at lunch hour. More to see on the other side. We'll slip into a short breather on Business Lunch. But up next, opposition leaders, including those suspended, stage protests against their suspension on the parliament premises. We get you all the details on the political front when we return. Welcome back. You're watching Business Lunch, and we've seen profit booking in the market. In fact, Nifty 50 is on the flat line, and mid-caps, they'd lost a lot of ground and then now trying to really recoup at this point. But some of the counters on my radar are Adani Group of stocks like Adani Enterprises, Ports, Power, all of them have seen substantial sell-off. And on the other hand, JSW Group of stocks as well, JSW Steel, Energy, or both have lost ground. The good news for the market is that big boy HDFC Bank has perked up in the last few minutes of trade, giving some bit of strength to Nifty 50. All right, let's take it straight to some national updates for today. And opposition members, including the suspended MPs, have staged a protest on the parliament premises against their suspension. Now, the Congress President Mallikarjun Kharge led the protest, and members of the INDIA bloc and other opposition parties are demanding a statement from the Home Minister Amit Shah on the Parliament security breach. Now, remember, a record number of 141 MPs have been suspended for disrupting the House proceedings so far. Meanwhile, a delegation of West Bengal leaders led by Chief Minister Mamata Banerjee met Prime Minister Narendra Modi over the fund dispersal to the state.
Okay, some more important news that we're tracking as well. Union Health Minister Mansukh Mandavia held a high-level meeting with state health ministers over the upsurge in respiratory illness cases, including a new COVID variant. He highlighted the need for regular mock drills in hospitals. This after India's first JN1 case was detected in a 79-year-old woman in Kerala with mild symptoms on the 8th of December. The Health Ministry has also urged states and union territories to maintain constant vigil over the COVID situation.
And now to some international important news of the day. In an unexpected turn of events for Donald Trump, the Colorado court has disqualified him from appearing on the ballot in Colorado in next year's presidential elections, basically barring him for next presidential elections. Now, this is due to his role in the attack on the U.S. Capitol by his supporters in January of 2021. Now, the state court's ruling will likely be taken up the U.S. Supreme Court, and this makes Trump the first presidential candidate in U.S. history to be deemed ineligible for the White House. Now, meanwhile, Trump's camp has called this decision undemocratic. So lots happening as we move towards U.S. elections in the next year, Pavitra.
Oh, absolutely. So those are all of the updates. But with that, we're going to wind down on this edition of Business Lunch with the news that the Nifty is 20 points in the red. It's 170 points from the high point of the day. We're seeing a correction across the board come through. The advanced decline has flipped completely. 1:2 in favor of the declines. Thanks for tuning into Business Lunch. Mid-cap radar when we come back.